So for as long as they remain micro or small, there are other funding options, family savings, own savings, philanthropic funding, innovative funding, accelerator financing, because those tend to come in small quantities. But as they grow bigger, they need to have a vision of growth where they can now tap into corporate banking, private equity, corporate bonds, and ultimately public listing. That is really what is known as the financing escalator. But so I really want to urge businesses out there to have a long-term, medium to long-term vision of how they want to organize their financing in the long term. And that starts from being organized, keeping proper records, being tax compliant and compliant with very many other laws, and just being an organized corporate citizen. Because when you tap into market-based financing or non-bank financing, your main source of comfort to investors is your governance. That's where they get the confidence that you're going to be able to repay. Most all repayment comes from revenue generated by businesses. So they have to be assured that these businesses are sound, the records are kept well, there's no leakages, etc. That's all about corporate governance. So there's a direct correlation between good corporate governance and access to capital. We're doing our best to expose Ugandans to the knowledge through our intermediaries. We're creating space for intermediaries to speak to the public through TV shows, radio shows, through our investor resource persons program. And this is really a temporary catalyst because ultimately they need to be able to drive the marketing of these funds themselves. But it's through interventions like this, through conversations like this, that more Ugandans become aware of the benefits of investing in through the capital markets. And I think we've done a fairly decent job. We need more support in that area, more airtime. But people need to pay attention and seek out this knowledge, but ultimately act on this knowledge, because I believe we've reached more than 4 million Ugandans. So the numbers of 65 million Ugandans, 65,000 Ugandans investing, is still quite small compared to the numbers that we believe we have reached. So people need to act on this information. There's nothing that is too small to invest. With 100,000 shillings, you can put aside 100,000 shillings every month and start your investment journey. Over 5 years, that would be much more than 6 million shillings. So there's nothing like that. They have, like people have too small savings. The savings are too small, but the sooner they start, the better. There's nothing really as such in terms of the latest, because what we're doing this year is what we've been doing in the past few years, focusing on the growth of savings in financial assets through fund managers whom we license, investing in collective investment schemes that provide a variety of different investment options: money market funds, fixed income funds, balanced funds, equity funds. We are really trying to see these funds grow, but not just the assets, but also the Ugandans who are investing in these funds. The numbers are still quite small. They've grown from 6,000 to about 65,000, but we need to get to 500,000 or 1 million Ugandans before we can start to see the impact of these funds in the economy, not just at a household level and individual level, but also at a macro level, because ultimately these funds should be able to provide funding to businesses, depending on the type of the fund, and even to government. Right now, government is one of the main beneficiaries of these savings. Still small, but with a huge potential for being a good source of patient capital, as opposed to bank deposits that tend to be short-term, and hence banks can't provide the long-term capital needed for businesses.